Hey guys, this is Sheree Macaroni with Macaroni TV, and I'm with one of my trusted lenders, Lisa Baxter, and we are going to talk about some all-time questions that she gets asked, I get asked, all about purchasing, getting your loans approved, things to that nature. So you definitely want to stay tuned for this episode. All right, Lisa. So thank you for coming. We're having coffee. We're just having a little talk back and forth. I get questions all the time about getting pre-approved, home loans, HELOC loans, bridge loans, all of that stuff. And you know, I'm just the realtor. I'm not the money person. I always say the money man, but since you're a woman, you know, the money woman in this case. So I would definitely appreciate you coming and sitting down with me today. And I just want to ask a couple questions and us bring to the audience on YouTube and all the other social networks some definite answers from the source.
Absolutely.
So
happy to help.
Thank you so much. So one of the questions that I always get asked when a buyer immediately calls me and they say, how do I even start the process on purchasing a home? So what would you tell a first-time home buyer in starting the process on purchasing a home, getting a mortgage?
Yes, first thing they need to do is pick up the phone and call me. And then I would like to talk to them about their specific scenario. Do they have money saved for a down payment? Do they have good credit? You know, what is their situation? So we'll start to look at their individual scenarios, because maybe they have great credit, but they don't have any money in the bank. So we put them on the peanut butter and jelly diet without the jelly for a few months and see where we get to that point. And I can give them a good, strong scenario as to what their mortgage payment's going to be, how much money they're going to need for closing, because it doesn't just come with just down payment. And then we can put them on a budget and get them to where they need to be in 90 days to take a second look.
Okay. You know, the big myth always is that you need 20% down to purchase a home. So let's debunk that myth. What do buyers really need as a down payment to purchase a home?
At minimum right now, 3%. And that's for first-time home buyers going on a conventional product, 3% down. FHA will require 3.5% down. If you are a veteran, that's a 100% loan, and USDA also offers 100% loans for properties that are eligible for USDA.
And when you talk about USDA, those are usually in rural areas,
yes,
right?
Yes, USDA usually is a rural area, yes.
Okay. So, a lot of people are refinancing properties right now. And I hear, and correct me if I'm wrong, I hear that they're refinancing and they're able to get out of PMI by refinancing.
That is correct. In most cases right now, especially because it's the seller's market and the values are higher than normal right now, then you have to be at 80% or less to avoid mortgage insurance. So when you are in a loan and currently have mortgage insurance, once your loan to value hits 78%, when you're in a current loan, then you are eligible to get rid of your mortgage insurance. However, you have to pick up the phone and call your current lender to do that. They can either do it there at their level, or you can come to another lender and refinance the whole thing for a better interest rate, cash out, get your loan to value down to 80%, and get rid of your mortgage insurance. That's accurate.
Well, I'm glad you answered that question, because I'm a realtor and not the money person. So that, you know, I've been getting, should I get my home refinanced? I still have PMI on it. All these different scenarios coming at me, and knowing kind of where to direct them. So if someone has a home loan now with a different company that maybe their interest rate's higher, they call me because I'm their local realtor, and they say, Sheree, I really want to refinance this property. You know, can y'all pick up and refinance their loan for them under a different mortgage company, or do they have to stay with their mortgage company?
No, they can go with any different lender that they would like to do their loan, as long as they can get them approved. Anyone can come to me, and I can refinance anybody else's mortgage into a new rate for a lower rate, to take cash out, pull your equity out, to do home improvements, to pay off debt, put a kid through college, whatever the case may be. Rates are traditionally lower than they're ever probably going to ever be in most of our lifetimes ever again. So if you can get a 30-year loan at 3%, then why wouldn't you?
Yeah.
You know, if you can reduce your interest rate by 1%, it's worth your while, most likely, to do the refinance.
Exactly. So I did another video just recently about 10 options that sellers can use right now on buying and selling at the same time, because the inventory is so crazy. Sellers are really afraid to put their houses on the market, but 78% of the people that are in my sphere of influence, my people that call me and ask me questions all the time, 78% of them statistically are thinking about selling their house but afraid they won't have anywhere to go. So one of the options is a bridge loan. So exactly what is a bridge loan?
A bridge loan will allow you to pull the equity out of your current home before it sells and use it for down payment on a new home. So then when the sale of your home takes place, the bridge loan and their current mortgage will be paid off at that point in time. The benefit of doing that would be in a scenario that the home is not going to sell until after ours closes. Most lenders won't count the bridge loan into qualifying on the new home.
Okay. So the other scenario would be a HELOC. So explain exactly what a HELOC is for people that don't understand what a HELOC loan is.
A home equity line of credit is used to utilize just that, the equity in your home. So it's almost like a checkbook. You'll be given a book of checks like you would from a regular checking account, and you have checks to write because you're able to access the equity in your home. So you only make a payment on whatever you draw out of that mortgage. So if they give you an equity line for $100,000 and you don't use it, it just sits there, then there are no payments to be made. If you draw on it like you would on a credit card and you use $3,000, then you're going to pay the interest on that $3,000 alone. So whatever, you can utilize the equity that's in your home.
So there's a lot of options right now. You know, the sellers think that there's not a lot of options for them, but really working with a great realtor that can write aggressive contracts, et cetera, and a great lender right now, we have a lot of different options for us to be able to choose from in helping our sellers buy at the same time.
Absolutely.
Yeah. So first time home buyers, you know, they always are talking about their credit scores. And so how is the FICO score looked at when they're applying for a loan? Like, is that really the most important thing in applying for a loan?
I wouldn't say it's the most important thing, but it's a necessary component. Your money in the bank for down payment, your credit history, as well as your credit score. People attach the two and they're not necessarily one and the same. So the credit profile is looked at just as heavily as the credit score that's attached to the report. Another misconception is that people go on Credit Karma, or these other sites to look at their credit scores, which is great for monitoring purposes. They don't utilize the same credit scoring system that mortgage lenders do. The scores that you will traditionally have are going to be 20 to 40 points lower than what you see traditionally on Credit Karma. So we're going to use the middle score of the three major repositories for mortgage lending.
So when I have buyers call me and they're like, oh, I hear you have to have a 740 to be able to be approved for a loan. Is that true, or can we debunk that?
That is not true. The minimum credit score that I need is a 600 credit score, and that would be for an FHA or a VA loan, a government-backed loan, okay? The higher credit scores are going to come into play with a conventional product that doesn't have as much mortgage insurance. So for lower credit scores, you have more mortgage insurance to help back up that scenario. So no, you do not need a 720 credit score to get a loan.
Well, I'm glad you debunked that for me, because I have a lot of buyers that are afraid to even step into filling out a loan application because they're so worried about a hit on their credit. It's going to pull their credit back down. I mean, I just had a conversation with one the other day, and she's got like a 680. And she's like, well, I don't want to pull a home loan or do a home application yet because I don't want it to bring my credit score down. And I says, well, if your score is really a 680, it's not really going to bring your credit score down that much. Is that a correct statement for me to say?
That's accurate. Yeah. Inquiries do have an impact on your credit score, but when you're mortgage shopping or you're car shopping, all the inquiries that you utilize during a 30-day period for those inquiries for shopping for a vehicle or a home are going to be counted as one. So when they're being pulled 3 and 4 times because you're car shopping or mortgage shopping, those are utilized as one and reviewed on your credit report as one inquiry during a 30-day period.
So when buyer calls me and they say, you know, I want to get pre-approved for a home loan. Usually they're calling me to show the house first, and I'm like, listen, peeps, we ain't going to look at a house till we get pre-approved. We got to start this process somewhere. And I say, you know, here's an app. I'm going to send it over to you, or here's my girl's number. I'm going to give her a call. Tell our first-time home buyers that's never done this before, what paperwork do they need to get together? Like, what are the items that you need to see to get them approved for a home loan?
It's very simple. If you are a W-2 salaried person or an hourly rate person that's not self-employed, I want 30 days worth of your most recent pay stubs, one bank statement, a copy of your driver's license, and your 2019 and 2020 W-2s.
Man, that's easy.
It's very simple. If you're self-employed, then the list gets a little bit longer. We're going to add in 2 years of tax returns to that.
Okay.